much. Let me start with that, the One World, One Tax theme, where it evolved from. For those of you who know that India has been in the news for a variety of reasons, $5 trillion economy in the next 3 years, $30 trillion economy by the time we turn to the centenary of India. But if you look back into the ancient history of India, when it comes to growth and development, India has always been at the forefront. And for all the reasons, we have stood by the philosophy of one world, one tax, which, as you know, was also the motto and the theme for the G20 meeting when India concluded its presidency. So when the organizers were planning this event, they said, why not run one world, one tax as a theme for this session? I'm indeed privileged, and it's my pleasure and honor to welcome our panelists, Gautam Doshi, renowned chartered accountant, and virtually with me are two legal international tax policy luminaries. Philip Baker. Philip has been an educationist. He has been at the forefront of taxpayer rights, and more importantly, he's a King's Counsel at Field Court Chambers. We also have Pascal. Pascal has been, for those of you who don't know, he started off his career in a leading Paris-based law firm. Before moving to the OECD, he was at the helm of affairs and, more importantly, the chief architect of the program which is called BEPS, Base Erosion and Profit Shifting. Until recently, he's now a partner at Brunswick Group. Pascal is no stranger for India. He's visited India many times and has a perspective. Welcome, Philip, and welcome, Pascal, for this session. I'm sorry I keep on looking back. I was told by the organizer that I will be able to see Philip and Pascal in front of me, which I can't see. I can just see myself. So if any of you can put the screen where I can see Pascal and Philip.
You look much better than we do, so good that you look at yourself. I hope you can hear us, but Philip and I are here. So good afternoon, and very happy to participate to that panel.
Thank you. Let's step back and look at why we chose this topic. If we step back, let's look at the objectives of the sovereign government. The sovereign government looks at welfare measure. It can do welfare only if it is able to collect the right amount of taxes. Now, whether these are rich nations, emerging nations, or developed nations, the objectives do not change. As a result of the tax systems evolving and as a result of growth in international businesses, multilateral forums have started playing a very important role. From United Nations to the OECD and other forms of multilateralism have played an important role. And the underlying focus of many of these multilateral agencies has been to try and deal with situation of cross-border taxes in a manner that businesses pay their fair share of taxes and allocation of taxes between nations is achieved in an appropriate manner. This goes back to the age-old dispute of source-based taxation versus residence-based taxation. And that friction also resulted in the world being divided amongst the rich nations and the emerging markets, no longer also called the developing markets, but no longer called the underdeveloped markets. If we were to look at the past 3 years of this decade, it would be evident that the largest multi-billion-dollar disputes has arisen on a single topic that we all as tax professionals are familiar with, transfer pricing. Let me try and name 3 important disputes that have gathered a lot of news in the recent times. The Coca-Cola and the Microsoft dispute in the United States, and more recently the PepsiCo dispute in Australia. All of them incidentally pertain to transfer pricing. Now, I need not explain to this audience what transfer pricing is all about, but for whatever it is worth, it's a tendency on part of multinational to shift profits to low or no tax jurisdictions. A decade-old OECD initiative now the BEPS initiative, which has snowballed what started off between the OECD members and the G20 into a global movement with now 140 nations participating in what is popularly also called as the inclusive framework. We are going to look at where do we stand today, and none other than Pascal with us to share his perspectives. A series of measures took place. Most of us as tax advisors feel that all of them have been with a view to address the issues that tax administrations and governments have been facing. Lack of adequate knowledge about taxpayers, bringing in country by country reporting requirements, common reporting standards, and a spontaneous and automatic exchange of information. Adoption of mandatory arbitration to be able to settle tax dispute, in my view, remains a distant reality for a host of reasons, and we are not going to get into that because that's not really the topic we are looking forward to. Unfortunately for the taxpayers, tax policy as perceived by most businesses have not kept pace with the world having adopted the digitalization and the rate at which the digitalization is getting adopted in the future. Our tax treaties, which were born out of a League of Nations almost 100 plus years back, do not keep pace with what the business realities today are. And more importantly, how the income from such nations or such wealth that is getting created by large multinationals should be distributed. Businesses today owe economic alliances to several countries, a concept which is elucidated in the last 100 years. On taxation of digitalized transaction, though the BEPS initiative, or what is called BEPS 1, envisaged a framework for achieving consensus, it signaled and in a way licensed governments to initiate unilateral levies. The unilateral levies have come under a lot of criticism, not just violating the tax treaties, but also departing from the public international law, particularly the Vienna Convention of tax treaties. The inconclusive, and I use the word inconclusive with a sense of responsibility because we have Pascal with us, the inconclusiveness of action point 1 that dealt with taxation of digitalized businesses is now under an inclusive framework called the two-pillar solution. Though the OECD, I must give the credit to them, has largely kept its promise to evolve a framework, there have been alternate paths that have come up, particularly the recent vote by the United Nations. As and when the multilateral framework evolves, its implementation will face a lot of challenges, including more importantly, how do you really go about harmonizing the anti-abuse rules and reorienting the source rules to accommodate taxation rights of market economies, which is a new right that has been given. All of this is not, in my view, going to just dilute the territorial nexus, but it could potentially lead to unilateral mechanism with disregard to, again, the Vienna Convention on Law of Treaties. The consequences could possibly result in a mistrust between the taxpayers and the tax administration, rise in the cost of compliances, and more importantly, surge in disputes. All of this clearly does not augur well for businesses from a certainty standpoint. For businesses, this is really a zero-sum game. With global minimum tax, whether a business pays 15% minimum tax in jurisdiction A, B, or Z, it does not matter. The question before everyone is, does this lead to certainty from a business standpoint? The objective of this panel is to debate what, in my view, is an aspirational theme, one world, one tax, and whether we can make it a reality, or we can crystal ball gaze if such vision can actually be realized. Put forth competing arguments by businesses and the administrations on one hand, and more importantly, how do you really resolve the dispute that occur inter se between tax administrations as to how they are going to share the booty of taxes that they've collected on such cross-border transaction. There is an additional variable associated to it, which is the duplicity of multilateral forums. Not to forget that the taxpayer rights could get compromised in the process, because the taxpayer finds itself, it actually is at this point in time either subjected to economic double taxation or subjected to unilateral levies. And to add insult to injury, this economic double taxation is not getting appropriately resolved through the treaty network. Our panel today, led by three of the most iconic personalities and whom I have looked forward to for many, many years in my professional career, I've had the pleasure to associate myself with them, are delighted to join us. So with that in mind, let's get started with our Q&A session. And the Q&A does not mean that each of our three panelists have to necessarily respond to my question. They can actually agree or disagree with the other panelists as well. And I guess that is the whole idea of bringing in the diversity. Pascal, let me turn to you. Possibly this is my only opportunity to ask you questions rather than you dictating what you are looking out from various countries. You have closely seen the divergence of views between nations as a part of the inclusive framework. You were actually in the middle of the negotiation. If you would like to just list down top 3 impediments that you came across to what you were trying to achieve, somewhat similar, allocation of taxing rights, but if I may just change it a little bit, if you have to achieve the one world, one tax, and given your experience at the helm of affairs at the OECD, what are the top 3 challenges?
Thank you, Mukesh, and congrats on your introduction, which I think sets the scene extremely well with all the issues. There is one word that you have not used, which I think we need to put in the landscape, which is sovereignty. And if we talk about impediments towards one tax, one world, we would have to deal with this issue of sovereignty. So that's the first impediment of all. Is it an impediment, by the way, or just a constraint? I would say it's a constraint, and it's a constraint which is linked to the people. The people belong to different nations, and each nation will have its own sovereignty. So before responding in details to your question, the first thing is, what are we talking about when we say one tax, right? There are many taxes, and most of the taxes which yield the biggest part of the revenue are local taxes. VAT is not an international tax, and VAT is pretty well designed to limit the negative spillovers, to limit the double taxation. So here we're talking about corporate income tax, and corporate income tax is what, 5% of the revenue globally, or 5% of the GDP, 10% of the revenue maximum. So we're talking about a small tax, which still yields a lot of revenue for countries, but that's not the most revenue-driven tax that we can have. Still, we need, as regards corporate income tax, we need to have, if not harmonized rules, at least properly coordinated rules with high level of cooperation if we want to have a world where business can operate smoothly, where the cost of business would be limited because of frictions and so on. Now, how do you move to a world where you have common rules on corporate income tax, or where you eliminate the frictions as much as you can? And what are the impediments? That's your question, Mukesh, to meet that goal. Again, the first impediment is countries are sovereign. So they will primarily be driven by their own nationalistic interests and by their own jurisdictional interests. So they will decide through their parliament what their rules are. And they will not live so well the fact that they have to give up part of their sovereignty to cooperate with other nations. This, however, changed over the past 15, 20 years, because globalization has demonstrated that countries, to protect their sovereignty, have to cooperate. And that's why we were able to make significant progress through the inclusive framework. And that's why international tax has become such a prominent topic for discussion. So the first obstacle is there. The obstacle, but a bit unlocked recently. The second obstacle towards one tax, if you wish, I believe, is the fact that the interest, the profile of countries is not identical and their interests diverge. You have very mature developed markets. I mean, the US or Europe would be in that category. You have changing markets. India is one of them. China is a bit more advanced compared to India towards moving from a source country towards more of a consumption / residence country. And then you have the rest of the world, the developing countries, which are not happy. And you can see their push at the UN to revitalize another approach to global taxation. I think the third impediment would be that there is no clear theory yet of what this one tax could be. I personally believe that a move to destination, you know that, and Mukesh, you said that in introduction, we started with source versus residence in a world which was mostly organized through bilateral treaties. So you had bilateral relations, and in the bilateral relation, you had source versus residence. As you said, we've moved towards something more multilateral, where the main issue is transfer pricing. But there is something like a crisis in transfer pricing. I think everybody agrees that the outcome of allocation of taxing rights coming from transfer pricing is no longer satisfying anyone, and that's the agreement of the 8th of October 21, when the whole world said, well, we don't like that and we need a new rule for the allocation of taxing right. But this new rule is in the making, I would say. I mean, the deal of the 8th of October 21 on Pillar 1 says you reallocate a quarter of the rent of companies to the market jurisdiction, which is a move to destination, but not a complete move to destination. And there is today a question on whether you have a full move to destination, or whether, in absence of the US being able to agree common rules, actually countries will grab their revenue through unilateral measures. So we're still in this transition phase. I think the direction of travel is destination, but we need to find the path to get there. And today the US is absent, but you need the US to be part of it if you want a proper allocation of taxing rights.
Thank you. Philip, let me come to you. You've been speaking a lot on issues that are plaguing the tax world. If you were supposed to look at 3 fundamental challenges as of today, and you also have spoken about and advocating about the World Tax Code. So keeping the theme of the session in mind, in light of the top 3 challenges that you see, do you see the reality of World Tax Code happening? And very often I have heard you talking about a World Tax Code in line with ICJ.
Well, thank you, Mukesh. Good afternoon to you, and congratulations on putting this session together. And it's delightful to be here, particularly with Mr. Doshi and with Pascal. And I thought Pascal's comments just now were extremely incisive and very, very interesting indeed. You've asked me a slightly different question. You asked Pascal about 3 impediments, and you asked me about 3 challenges, which I think are slightly different issues. If I were to try to identify, and you've also asked me about an international tax court, which is really a separate question. I'll perhaps come to that at the end. I think if I were trying to identify 3 challenges at the moment, the first challenge would be moving as quickly as possible to a certain and definitive institutional structure dealing with international tax. We've got this uncertainty at the moment about OECD, UN, the inclusive framework, and no one's quite uncertain at the moment about how the institutional leadership of international tax is going to proceed. And I think the most important point here is to have a clear agreement about the shared agenda between the different organizations involved in international tax. The OECD has been incredibly successful for many decades. It has established the inclusive framework, but there are clearly some countries that wish to have a greater role for the UN. I don't think anybody is suggesting that the OECD should just shut up shop and stop working. I mean, there are massive amounts of work to be done still with regard to, for example, Pillar 2. That's going to involve people in Paris for decades to come resolving some of the issues there. But the whole uncertainty about how the tax agenda is divided between OECD, UN, and don't forget we've got the IMF, we've got the World Bank as well. That needs to be resolved with a sensible compromise. The danger is that we end up going to a period where proponents of one organization take a stance where they're not perhaps seeking compromise with proponents of another organization, and we end up with a black hole where we don't have any real leadership in international tax. And that would be, I think, very much a challenge. Second challenge, and it touches a little bit on what Pascal was saying about getting the US involved there. We do have the difficulty of the uncertainty about the US's position on international tax. There has been a lack of engagement from the US, and the difficulty that, for example, a huge amount of work has been done on Pillar 1 with regard to developing the agreement of 2021 towards a multilateral convention, only to face the probability that the US will never be able to sign that convention. We have this challenge of dealing with the largest economy in the world, where it's extremely difficult because of constitutional positions as well as political problems in the US to get movement forward. So that, I would say, is my second challenge. My third challenge, you'd expect me to say this, is securing the protection of taxpayers' rights. I'm not saying that there are problems throughout the world, but it's important that we take taxpayers' rights seriously. All tax systems rely upon a huge degree of cooperation between taxpayers and the revenue authority. They rely upon a relationship of trust, and a large element of that trust is taxpayers knowing that they are protected when they supply information, confidentiality, and that they can deal with an uncorrupt, fair tax administration. So those are my three challenges. I realize I haven't touched on the International Tax Court, but let me leave that aside for the moment because I don't want to hog the discussion.
Thank you. Gautam, you've been a professional most of your work life, and then you also had the honor to lead a large corporate, and you dealt with cross-border transactions for your clients and in your own organization. What do you see as the three major challenges that global businesses are facing from a tax enforcement standpoint, not necessarily India, but anywhere in the world?
Thanks, Mukesh. And I think, as discussed and as you put it, perhaps the first and the biggest challenge today is transfer pricing, and continues to remain transfer pricing, because we are dealing with a subjective area. A lot of transfer pricing is not something which you can just objectively measure as you can measure a number of things. And in a subjective area where there is a difference between the taxpayer and an administration, one can understand the issue, there is a problem. But when there is between the taxpayer and multiple administrations, the problems are that much greater. So I would really say, if we can achieve the objective of what this session is trying to achieve, one world, one tax, then I think we will go a long way in solving this problem, because then perhaps we will have a formulary system under which you will assess the overall income of an entity and then apportion it, rather than a system where each country is trying to work out what is the attributable part which that country can tax. So I would say that is perhaps the biggest. The second is that while we think of organizations as a single entity, they are multiple legal entities. They necessarily have to be for commercial and the other reasons. Where you don't have this whole concept of a group, and even if where you have concept of a group, you don't have it cross-border. You apply it in one country. Now, if it is not cross-border, you are effectively, as you said earlier, to some extent, paying double tax. You are paying extra tax. Because you are paying taxes on the income you earn, say in country A, while carrying forward the losses which you suffer in country B. And you are not able to set off one against the other. You are not able to put them together. So that perhaps is another major impediment. The third is perhaps more subjective, very difficult to confine, but the issue is, one is concerned that in case one gets into litigation, is there going to be a degree of bias, a degree of change in the approach, either of the authorities or of the judiciary in a foreign country? How are they going to look at it? Are they going to look at it as objectively as you would like them to look at it? But then this is not, in a sense, the limit of the problems. You have a number of issues which you cannot solve. The issue of the mobility of the personnel, the workmen. You are not able to move them freely between nations and between people because of tax issues between them. Issues with any major M&A transaction. You are now concerned with finding out what will be the impact in maybe 20, 30, 40 countries. And that's something which is very, very difficult to work out. Or things like situs rules, which you don't really know. And ultimately, being faced, I would say, come back to the transfer pricing issue with the possibility of double tax on the same income because of the way in which each country wants to compute its tax. I think these are the key difficulties which hopefully we can solve, maybe by BEPS, by Pillar 1 and 2, maybe by a better system of a one world, one tax.
Thank you. Pascal, exchange of information, the OECD has played a very instrumental role and revolutionized the entire data sharing exercise between countries, which I'm sure many tax administrations made use of to collect more taxes. I do recall not long ago, if India used to seek information from the Swiss authorities under exchange of information, the Swiss cited the banking secrecy rules over there. What has been your key takeaway from the experience on reporting standards, country by country reporting, exchange of information, and what do you see is the instrumental role that would be played out in the future from the point of view of the theme of this event, which is One World, One Tax?
Thank you, Mukesh. Very good question on something which is not very technical, it's not as exciting as transfer pricing and the whole debate on how you allocate taxing rights, but something very pedestrian, I would say, where you just organize tax cooperation between countries. This should have started back in 1928. But in 1928, a number of countries said, you know what, we are ready to assist other countries for the implementation of the treaty, but not for the assessment and the collection of their own taxes. That's their business, and our sovereignty does not allow us to assist other countries in protecting and implementing their sovereignty. And I think the leapfrog change which happened back in 2009 was the fact, and it started in the 90s, and my predecessor, Jeffrey Owens, was instrumental in trying to push a move towards the end of bank secrecy and promoting a proper exchange of information without limitation. And in 2009, the global financial crisis was the time where countries said, we have one world, we have globalized companies. We tax administrations are islands which are not really breached. Some countries do exchange information, but it's enough of a few countries not to exchange information for all the money throughout the world to go down to these countries, to flow down to these countries. We need to put an end to that. And I think probably the most important change in international tax has been this agreement that tax cooperation is the only way for sovereign tax authorities to survive properly, to do their job properly, to collect the tax in this one world environment. So the lesson from that is it's working. When you have the instruments, it's working. And today we have the legal instrument with a multilateral convention on mutual assistance, which includes some very important provisions on the protection of taxpayers' rights. And I'm trying to debate here with Philippe, and I think it's a very important part of it. So you have a legal instrument, and you also have the technical instrument to exchange information. The Common Reporting Standard uses the Common Transmission System, the CTS. So the OECD, through the Inclusive Framework and the Global Forum, was able to put in place for the service of tax administrations and the request of all tax administrations instruments for them to put the information in pipes, to format it, to make it work. Last remark is, this is the future. I mean, data collection and the value of data is where our world has already moved to. You have the largest tech companies which thrive on the basis of the data they collect from their consumers. And that should be the same with tax administration. In this digitalized economy, tax administration have access to the information. It's easier to process, it's easier to exchange, it's easier to analyze, especially with artificial intelligence. And clearly, that's the future. This future has to come with the proper protection of taxpayers' rights, because you don't want intrusive tax administration. You need to put the proper walls there, but that's the future. It worked. Two numbers, and I stop with that. Couple of numbers. Last year, I think it's more than, it's so big that I'm forgetting the numbers. I think it's 140 million bank accounts which were exchanged for a total value which exceeded 11 trillion euros. I mean, this is absolutely massive. You have more than 100 countries exchanging information automatically on bank information, on trust information, but also for multinational companies. Finally, you refer to country by country reporting. It's also exchanged massively, not enough. Developing countries don't get it enough, and I think that's one of the reasons why they're not so happy with the inclusive framework. I should have done a better work there to make it a global standard. It's a minimum standard, but more properly implemented. And the upcoming transparency of country by country reporting shows that the data of taxpayers will have to be shared publicly. It raises issues of taxpayers' confidentiality, but that's the trend we're moving towards.
Thank you. Philippe, as a King's Counsel, you have been witness to major trials. You keep monitoring all major tax trials across the world. And with more and more tax disputes coming up in the future, what is your view with tax specialist courts? You have in your IFA General Report of 2015 noted the formulation of internationally recognized standards for conduct of tax officials on cross-border transactions. How do you realize that vision? And did your recommendations find favor with the OECD and the UN?
Okay, let me break that down, if I may, Mukesh, because I think there are two questions there. And if I may, I'm also going to slightly respond to Pascal on automatic exchange of information there. First point, specialized tax courts. Taxation in any country is becoming more and more complicated. And domestically, you see specialization in India You have the income tax appellate tribunals that specialize in income tax matters. You have a growing expertise in tax at the High Court level. And the Indian Supreme Court is probably one of the most active Supreme Courts around the world in terms of hearing tax cases. So you're getting that expertise. But international tax is a extremely complex, developing topic that touches upon both law, accounting, economics. Talked about transfer pricing. Economics is very significant. And I think there is a need to develop greater international dispute resolution with that expertise. Through arbitration and map-based arbitration following on tax treaty map, that is a way of tapping into that expertise, and perhaps we might touch upon the issue of whether or not that really challenges the sovereignty of countries. I don't think it does challenge the sovereignty of countries. I've never been convinced by the argument that arbitration is a fundamental challenge to sovereignty, but I think we are at some point in time going to have to move towards an international tax court. Let me just take one example. At the moment, cases on the interpretation of tax treaties, the highest courts they can come to are to the Supreme Courts of countries. And to a certain extent, those Supreme Courts are developing different approaches to the interpretation of tax treaties. Take, for example, the recent Nestle decision of the Indian Supreme Court. That's a case on MFN provisions that has ramifications for many other treaties around the world. And there are those who are not entirely content with the way that the Indian Supreme Court resolved that issue. But there is no way at the moment to try to bring countries together to have a common approach on treaty interpretation. And if you are talking about one world, one tax, at one point in time, we are going to have to move towards one world tax court. We can talk about more detail of that, but I think that that is a development, perhaps not in my lifetime, but you and Pascal, you're both much younger than me. It may well be in your lifetimes that you will see a tax court. The second issue that you asked about was the IFA General Report and internationally recognized standards for the conduct of tax officials. It's really very surprising. If you look at human rights law generally, in many, many areas, standard setting for officials has developed to a very highly refined degree. For example, if you are involved in the police or in the military or in running prisons, you will find that there are UN-based standards, principles, guidelines for how the conduct of those officials should be carried out. It is a sad fact that we do not yet have such guidelines for general tax officials. Strangely, there are some guidelines for customs officials from the World Customs Organization, but not for tax officials. And I'm afraid that our call at IFA fell on rather infertile ground at the moment. The OECD obviously has very heavy commitments with BEPS 1.0, BEPS 2.0, and it doesn't have a general human rights agenda as part of the organization. I think this is a topic that may very well attract the UN's attention there. I don't want to carry on talking too long, but I did want to just come back to Pascal on this issue of exchange of information there. Pascal said several times the importance of taxpayers, protection of taxpayers' rights, and that is absolutely critical. But we do have data protection rules for the handling of data, but not every country, even countries involved with automatic exchange of information, abide by those rules or protect the data. It worries me that the move towards automatic exchange of information has been very fast and it's gone in advance of the protection, and that we are building up a potential disaster here where a huge amount of information about those who have cross-border assets, bank accounts, pension arrangements, that information is gathered together in effect one place and could be targeted. And if that were leaked or information was stolen from that repository, it could have tremendously damaging effects. And so it worries me that we are exchanging information with potentially non-benign countries, but also that we are creating a potential nuclear weapon of data with adequate data protection. But thank you for letting me just respond on that point as well.
Gautam, we have witnessed the landmark constitution amendment which replaced our 70-year-old archaic, inefficient, indirect tax system to translate into GST, one nation, one tax. Given where we stand as a nation and given the growth trajectory of the country, fifth largest economy in few years, third largest economy at the centenary of the India's independence, what do you think aspirationally role India can play from an international tax policy and to make the global efforts towards one world, one tax?
Yeah, Mukesh. As you rightly said, and it's a very interesting case study as to how we achieved GST and whether that is something which can help us to achieve one world, one tax. But then GST has not come easily. It took time. We are talking about 15, 20 years of negotiation and efforts. But finally, if it came through, I think it required a tremendous amount of political will on the part of the government of the day that they really wanted to achieve it. If that political will was missing, then all the other discussions didn't really work. The advantages were apparent. We have all seen them. That one nation, one tax, the advantages we are seeing. How much there is greater ease of doing business, how much easier it is now to do business across the country than what it was in the past. The growth on business is testimony to that, I would say, to an extent. But yet, we were not able to achieve that. And even today, we had to make sacrifices and compromises. If states were willing to come together, but they didn't want to give up all their rights, so you said, all right, the most maximum revenue is from oil and petroleum, we will leave out oil and petroleum. We will leave out alcohol, so that you have your right to collect taxes on your own. Then came the second part. You had states, the manufacturing states didn't like it because they thought they would lose revenue. The consuming states would perhaps get more revenue, and so on. So you had a center which said, okay, please accept this, come together, let's do one nation, one GST. And if this results in a loss to you, we will make it good, at least for the first 5 years, 6 years. So you had somebody backing it up. So that is what you need to reach, I would say, one world, one tax, a political will. Why would countries come together? Who is the statesman, who is the person who can explain to the countries the advantages, that certainty of taxation and the ease of doing business will bring to the world, will bring to the growth in the economies of the world, which is the only reason why they will accept some restriction on their ability to tax on their sovereignty. Otherwise, they are not going to willingly accept it. Otherwise, they are going to keep giving all the reasons which Pascal mentioned earlier, but otherwise, like my different stage of development, geography, natural resources, my people, and so on as well. So I think, yes, does India have the ability to give thought leadership for such a thing? To be able to define whether residence or citizenship or which should be the base for taxation, if you are talking about one world, one tax, whether legal entities or economic entities should be the base for taxation, and so on and so forth. I think India has the ability to give that thought leadership, and India perhaps is trying to develop the ability to give the political leadership. And if the two can come together, then I think, yes, we should be able to play a part in bringing it together.
Thank you. Pascal, I can take the liberty to ask you this question because you're no longer with the OECD. How do you view the emergence of UN as a multilateral forum to put forth a credible voice for the developing nations? And the context to this is, without taking away the credit of the yeoman service that OECD has rendered with regard to BEPS, there is a feeling in the inclusive framework that consensus building was not as successful as the politicians had put it across, and that's perhaps the reason the UN development would have occurred. What are your views?
Okay, good question, and I'm a free man. I'm no longer a diplomat, right? So I can speak my mind. I'm not wedded with the OECD. I'm not divorced from the OECD. I'm still proud of what we achieved. So I can speak quite, I think, freely there. A couple of remarks. One is we did build inclusivity at the OECD. The Global Forum on Transparency has more than 170 members on an equal footing, and it is working. And for those, I guess nobody in the room has attended a Global Forum meeting, but I can tell you, and there are proofs of that on social media and elsewhere, that countries attending say this is a family. They feel at home. Big success. Nobody's disputing that. You're absolutely right to say that this success was not fully duplicated with the inclusive framework on BEPS. And we may want to pause and try to identify why and whether this is completely true or not. And then I will move to the question on the UN. The inclusive framework, one, doesn't have exactly the same institutional setting. I will not bother people, bore people with the technical legal differences between the Global Forum and the inclusive framework, but they are such, there are some, and such as developing countries and non-OECD countries are not exactly on the same equal footing. And that has created frustration, especially when it was about to write off Russia after the war in Ukraine. Some countries realized that it was the OECD countries only which could decide and not the full membership. That created frustration. Second reason is the Global Forum implements a standard. The inclusive framework checks on the implementation of the BEPS minimum standards, but is also negotiating. And of course, when you negotiate, it's not the same dynamic as everybody implementing the same rules. Negotiation means that you need to give up stuff and you may obtain other stuff, and the dynamic is not the same. And it is true that OECD countries are generally better equipped than developing countries. India is extremely well equipped. With Akhilesh Ranjan and now Rashmi Das, you have some of the stellar delegates to the inclusive framework. But that created frustration. Last, it's about the agenda. The agenda setting was largely done by OECD countries and not developing countries. And when you when you add to that the global geopolitical tensions, you have the recipe for frustration and a push to the UN. Now, can the UN do a lot? Well, before responding to that, you need to recognize that the inclusive framework achieved a lot. The deal reached on the 8th of October 21 on Pillar 1, that's basically the new architecture for the international tax system for the decades to come. We need to find a path for the US to implement. At some point, it will become a reality. And the global minimum tax has occurred a couple of days ago. It has happened. It's here. So that's quite a huge achievement. Now, where all the items that developing countries wanted to push, have they been agreed? No, they have not been on the agenda. And that's why you have this frustration. Now, at the UN, you have a number of NGOs and others who say, well, we will solve human rights issues and well-being of women in Africa by a global tax deal. This is not true. This is, I wouldn't use four-letter words, but I could here. This is lying to the people to make them think that you will have at the UN a massive agreement that you couldn't reach at the OECD, because the US, as far as I know, is also a member of the UN. So you have some extremists, I believe, who are pushing an unrealistic agenda, and actually they know it's unrealistic, and what they want at the UN is a tribune to speak, to talk the talk instead of walking the walk. And that will happen for sure. And it's a bit of a pity because it will create further frustration. What could the UN do? I think the UN probably could focus on some specific agenda for developing countries. Simplification. I think all of us recognized that the rules are extremely complex. And there may be ways to have simpler rules for developing countries. And that's where I will be provocative in return, Mukesh, because you were provocative and rightfully so in asking your question. I would ask India, who is a big promoter of the UN, well, where is your interest? Because developing countries, small developing countries, do not have the same interest as India. And very often India is pretending to speak on behalf of developing countries or African countries, where it is not the case. You are such a large market, such a thriving economy, that you do not have the same power. I mean, you have a much bigger power than smaller developing countries. And India here will have to clarify its positions, because in a UN context, it's not part of the so-called global south and fighting the rich countries. Actually, India is more in the camp of the rich countries when you talk about developing countries. So the UN may be a way to clarify all that, but I believe, and I think you said it in your opening remarks, the UN will fail if it tries to do something grand new, but it could succeed if it brings some bricks, which you appreciate the pun, right? Some bricks to build a new building for developing countries.
Philip, would you like to just quickly add a rebuttal to the debate on UN versus OECD? I know you have also been a critique in a way of the OECD. Hasn't come out very clearly as a supporter of the United Nations, but what's your view on achieving the desired stability in our international tax systems?
Okay, I don't think this is a rebuttal, but really a sort of perhaps a slightly nuanced approach from Pascal's. Pascal pointed out that the UN could focus on a specific agenda, and I think that is really what we need to be talking about, is the sharing of the international tax agenda between different organizations. It would be foolish for the UN, for example, to start developing its own version of Pillar 2. I mean, that would be absolutely crazy. That's clearly an OECD developed topic, and it's well within the scope of the inclusive framework. Certainly developing, sorry to use the word developing in different contexts, but certainly focusing on the issues for developing countries is particularly important. I think it's a little unfair. I have to defend them for Pascal to attack some of the NGOs that are supportive of this. It's not just sort of human rights and the rights of women, but it is trying to make certain that the tax system works internationally for all countries, and in particular helps to achieve the UN Strategic Development Goals. A key part of the SDGs is improving the country's access to their own local resources, including tax resources, and that involves improving tax administration. It involves simplifying the tax laws, absolutely agreement with that. So there's a huge amount of agreement here, and I think it's a matter of coming to a position of certainty and compromise, maybe not consensus so much as compromise over this particular issue. And I repeat what I said earlier: if we end up with two camps whether India should be in one camp or the other, it's debatable. There are two camps, one the camp of the OECD and the other camp of the rest of the world, each with their own organizations. That would be devastating, particularly for the idea of one world, one tax there. So I'm delighted to hear that Pascal is neither wedded to nor divorced from the OECD, but it's good to have somebody with experience, a lot of experience from within the OECD, now being outside and taking an objective viewpoint there. So I hope it's not a rebuttal, but it's more of a nuanced approach, shall we say.
Philip, let me come to you on your opinion on modernization of tax codes. And I'm glad that you made a reference to the Indian Supreme Court decision on the MFN case. And I tend to agree with you that it tends to redefine the principles on treaty interpretation. Whether that's right or wrong, that's not the debate over here. The question is, what does that lead us to? Because if the Supreme Courts of important jurisdictions start giving varying opinions or interpretation on treaty law, then you're looking at a very chaotic situation. There is a view expressed by some of the academicians, should the Supreme Courts of important jurisdictions seek intervention from General Justice Services Administration for everyone's benefit? It's a network of legal experts comprising retired judges of the ICJ for establishing a digital code. Is that something, Philip, in your view, the world can make a start with a digital tax code to deal with issues on digitalization of businesses that would save cost, not bother particularly emerging nations who do not have a developed judiciary system? India is an exception. India has a fairly developed judiciary system. And this is particularly important for countries that are opposing the mandatory arbitration cost, citing a cost of arbitration being high. Do you think something like this can become a reality? One world, one court, particularly for specified disputes that are likely to come up in the context of digital businesses?
Well, one court, yes, I've said that before and I won't repeat what I've said. The General Justice Services Administration, probably no. What you need, if you're going to have a tax court, is to draw upon international tax expertise. And having general public international lawyers who may have had very limited involvement with tax matters is not, I think, a recipe for successful outcomes. There was a short experiment in the 1920s with having tax cases going to the then Permanent Court of International Justice. It wasn't continued, partly because MAP was developed and partly because, frankly, the public international lawyers in The Hague were not the right people. So I think if you're going to have a world tax court, which I think you do need if you're looking at one world, one tax, then you've got to staff that with experts with a background from tax administration, tax practice, tax academics. It's too specialized an area. Just coming back to the Nestle case and the issue on treaty interpretation, we do have this problem at the moment that Supreme Courts in different countries are taking significantly different positions. Take, for example, the question of referring to subsequent versions of the OECD commentary. There are courts like, for example, the United Kingdom Supreme Court that have said it is permissible to look at subsequent versions of the OECD commentary. Until recently, the French Cour de Cassation took the view that you could not look at later commentary. That has changed now. There was a case a couple of years ago, Société Planète. Interesting, we're talking about one world, now we have one planet here. The Cour de Cassation changed its position on this. That can have a very significant difference in the outcome of a case if courts are taking different approaches towards treaty interpretation. How do we try to take this forward? Well, we could wait for an international tax court to set down principles, but as I say, I don't think that's going to happen in the next 20 or 30 years. It is an interesting project, which I think would be a suitable project for the UN to take forward to try to develop a common agreement worldwide on the approaches to tax treaty interpretation. That's significant for developing countries where sometimes courts in those countries are for the first time having to face issues of treaty interpretation without a history. And the courts are having to ask themselves, well, what is the impact of the Vienna Convention? What is the relative weight to be given to the OECD commentary, the UN commentary? What is the relevance of cases from other courts? And that's something upon which some guiding principles could very usefully be developed. And if I was looking at something to put on the agenda of a new UN body, because this isn't just something that should be limited to the OECD or even the inclusive framework countries, I would say developing some guidance, maybe an multilateral convention on the interpretation specifically of tax treaties would be a very useful project.
Pascal, I just was wondering if you wanted to offer any rebuttal. I'm sure that when OECD as a part of the BEPS was debating action point 14 on dispute resolution, you were fully aware that many of the countries would have give you a pushback on mandatory arbitration. So was one tax court concept debated within the action point 14 as a credible alternative to resolve the disputes? Because in a way, your inclusive framework, which is trying to achieve the panel, which is going to determine, kind of disputes in relation to amount A, you are subjecting it to a forum as a part of the framework. But for other forms of dispute beyond digital businesses, was this concept debated in action point 14?
No, the answer is no. So action point 14, so we do BEPS, 15 measures. One of the measures has to recognize that governments are doing extremely badly at eliminating double taxation. Very badly. Taxpayers were probably too aggressive, and that called for BEPS, and BEPS was developed. But I personally believed that the governments, if they were to change the dynamic by better fighting base erosion profit shifting, would have, as a way to balance the dynamic, would have to be better at eliminating double taxation. Governments are really awful at that, and they're hiding behind the concept of sovereignty. What Philippe said is absolutely true. In a number of cases, there could be a common global interpretation. There is no reason for the French Conseil d'État to say, we'll take the commentary now and not later, and another similar court in the UK, in Germany or elsewhere to say, oh no, that's not what we want to do. Is it a question of sovereignty? Not really. It's petty issues which create big differences in the treatment of taxpayers and big uncertainty. And I wouldn't mention the recent decision of the Indian Supreme Court in that field. Is it a question of sovereignty? Are you really sovereign when you decide so? And couldn't you find a better way to address that globally? And my belief is that at least we should have a way to sort out disputes in a compulsory manner. And arbitration, and I think Philippe said it earlier, arbitration in tax, especially with baseball arbitration, I mean, you can find different ways where the tax administrations are not really giving up their power, where the will of the people expressed through parliament, consent to tax, a score to sovereignty, will not be rebuted by the fact that you sort out a simple dispute between two countries on how to share taxpayers' money, right? This should happen. We tried in Action 14. We kind of failed. There was little progress, but it failed. The real progress, though, is on Pillar 1. On pillar one, the idea that you would have a new allocation of taxing rights coming together with better tax certainty upstream. You have to agree on amount A upstream. And if there are disagreements, even though it will be quite mechanical when it's implemented, if it is implemented one day, if there is a disagreement, you have a procedure to sort it out. And at the end of the day, you have some form of arbitration. I believe this is the way forward. I don't think, and I'm not so younger than Philippe, I'm not sure that I will ever see a world tax court, as I will never see a global international tax organization. And the reason for that is name it, lose it. If you say global tax court, all the countries will say, oh, we're sovereign, we don't want that. If you say international tax organization, you're losing it. But the inclusive forum, inclusive framework on BEPS is a form of global international organization on tax, right? It has come up with rules that all the countries implement directly. So you see, I agree with you. This is the way to go, arbitration. Going a step forward with a global court, no, but finding mechanism to have common interpretations which countries will draw on and will implement by not naming it a global court, I think could be the way forward. So we don't disagree with Philippe. It's just on naming it or not.
So it seems that it's all about labels. Pascal is saying global tax code will not be acceptable. He's saying global international arbitration will be acceptable. Why don't we call it international dispute resolution? It really doesn't matter so far as taxpayers get certainty. Coming back, Gautam bhai, to the point on MFN judgment, which has been widely criticized, not just by international experts, but experts in India as well. They are talking about being very circumspect about how the Indian Supreme Court has adhered to the good faith principle arising out of Article 31 of Vienna Convention. And in light of that, when we are debating one world, one tax, is it a case of one step forward, two step backwards? Because if tax administrations continue to argue, put forth these cases which taxpayers view, rightly or wrongly, going against the international public law, where will we go on our agenda for one world, one tax? Do you think such, in my view, that such frictions are going to become even more common? Because for governments to defend cases which involve huge taxes, it's their right, and for taxpayers, it's their right as well to defend. Given all of this framework, what do you see as the future of multilateral treaties? Do you see that courts would either get more experienced in dealing with these issues, or there is at least some merit in a global dispute resolution mechanism? Because I can't imagine countries all over the world will have the wherewithal to deal with international tax disputes. The other common theme that is emerging amongst experts is, should there be a binder or a guidance on interpretation of tax treaties as guidance to tax administrations and even to courts, so that at least some common view is taken on important principles? So I just thought we'll get your views on that.
Yeah, but in the presence of eminent jurists like Mr. Baker, Pascal, and you, difficult to speak on a subject like this as an accountant. But yes, I think ultimately anything going to a court is at best a 50-50 decision. You can never be sure how a court is going to react. And there could be two views, even on, say, the MFN decision. If the court believes that the essence of the treaty is X, then that is what they have to achieve through the interpretation. You may not agree with what the court thinks is the essence of the treaty, but if that is what the court has come to believe, and that is what they enforce, then I think they are still in line with the good faith principle. It's just that their understanding of the treaty is different from that of many others. So that's really one way of looking at it. So I think the last part of what you mentioned, guidance, principles, laying down guidance at an international level, of how treaties should be interpreted, how international disputes should be approached is absolutely essential. And I think the greater part of it is not to depend on the courts, but to depend on the governments. It's ultimately the government's role. It's the executive's role. If they are convinced that the multilateral arrangement is something which is in the interest of the nation, and that is why they have agreed to it, then they must find a way to support it. They must find a way to interpret it positively, because ultimately courts are going to be like any other person. There is bound to be some degree of bias. There is bound to be some degree of a nationalist fervor. So if you are left with a court and if you are faced with a problem, which would mean less tax for India as opposed to more tax for India, the chances are the court is going to interpret it to say more tax for India, if they can find a way to do it. And therefore, I think it is really the government which must understand why they are agreeing to a treaty, what is their underlying principle, and why they are doing it. If we can get governments and executives to approach it in a better way, and that can be done by training, that can be done by the principles, as you said, which can be set out, etc. I think that should go a long way in achieving this dispute resolution. International dispute resolution, if we can achieve some solution for that, is welcome. Now, whether we call it a global tax court or we call it arbitration, we are really saying, I would say the same thing. So the name is not material, but we do need a solution.
We're coming to the last segment. Pascal, you have been a strong advocate of tax inspectors without borders, an initiative that you led at the OECD. There is some criticism, which is that it's largely driven by political agenda because it caters to what sovereign governments want. In light of that, what happens to taxpayer rights? And don't you think tax inspectors without borders should combine with itself and balance it with what taxpayer rights are?
No, that's a simple, clear, neat answer. No, I don't think so. Tax inspectors without borders is a very niche initiative, which just meets huge demand from developing countries, which need assistance in training their own people on real cases. There are a number of countries which have never done any transfer pricing audit because they don't have the competence. And tax inspectors without borders drew on this very simple idea that put aside the theory of sovereignty and just make sure that you embed in a local team somebody who's skilled, who comes from another country and is able to conduct the audit with a local team to transfer the knowledge. So taxpayers' rights are protected by the domestic legislation, and so should they, and we can develop further rules and whatever. But the audit is not performed by a foreigner coming on its own, disconnected from the local environment. Let me just give you one or two numbers. On just above 100 cases over almost 10 years, tax inspectors without borders has triggered almost 3 billion euros of revenue collected by countries. And I think the assessments are much above that. These are coming from taxpayers who have agreed to pay the tax which was due. And I can tell you that what tax inspectors without borders has shown is that in the least developed countries, a number of taxpayers were clearly abusing of the situation, not leaving money because they knew they wouldn't be audited. Last remark, I attended once a tax inspector without border experience. It was in Jamaica, and we're debriefing with a local team, and I told them, what's the main benefit? And the head of the tax administration then said, respect. We've gained respect from the taxpayer. When we started the audit on our own, we sent a request for information. We didn't have an answer. When we organized the meeting, we had the accountant -10 in the hierarchy attending the meeting. Once we had the tax inspector without border working with us, we sent questions, we got answers. When we organized the meeting, the CFO of the company was present because they were taking us seriously. And I think this is a way to build capacities. You talked about sustainable development goals, domestic resource mobilization. It has to start with very simple implementation of existing rules before building new rules. And that's where sometimes I'm a bit puzzled by all the ambitions of the UN to build a new world. Let's try first to implement existing rules in the least developed countries. And that's what Tax Inspectors Without Borders is. So I think it's a pretty successful initiative, and it respects taxpayers' rights in the countries based on the country's rules.
Philippe, your comment, particularly if you disagree with Pascal, that taxpayer.
But he can also agree, you know.
I don't disagree. I don't think Tax Inspectors Without Borders raises problems of protection of taxpayers' rights. I think it's an extremely helpful initiative. And I'm very interested in this comment about respect. I think it gives expertise. I do think there is a rights element in that the inspectors with a lot of experience from their country going to another jurisdiction, one of the things they may carry with them is also ideas about how to improve in the country to which they are dispatched, how to improve protection of taxpayers' rights in those countries. So going from a country where there are good systems of data protection, good systems for rights of taxpayers in terms of trials and in audits, going along and passing on those good practices. So I don't see that there's a problem, but actually an opportunity here from Tax Inspectors Without Borders. So I actually agree with that. Incidentally, I should correct something I said before. Pascal very kindly corrected me that the French case Planet was a Conseil d'État case, not a Cour de Cassation. I'm embarrassed that I misspoke about that before there. Yes.
Gautam, we after in an unprecedented amendment 2020, we brought the taxpayer charter in our Indian legislation, which at one point in time seemed a dream. Has there been any experience that you've had where either courts or administrations actually were seen as enforcing the taxpayer rights? Or do you think it is a great concept which our Honorable Prime Minister announced and the implementation is something that has not happened?
I think the concept is right. Courts have implemented it not as the taxpayers' charter. I have not really come across them looking at that, or even the administration really trying to do that, if at all, some degree of lip service, but no real substantive. But on its own, we do have a number of situations where courts have acted to uphold taxpayer rights. So, to that extent, to the extent that courts on their own do that, it's a great thing. On the other hand, where courts have found or felt that something was going wrong and perhaps the mistake was that of the legislature, for example, like the amendment on section 148, the courts have still stepped in against, I would say, the taxpayer by using powers which are far beyond the normal. So I would say the issue of taxpayer rights vis-a-vis courts depends to a great deal on the judge and his own personal beliefs, which is worked much more and better than, I would say, the charter.
We have many questions. I'm going to ask some of them because I can see the clock ticking. It's just about 4 minutes left. Gautam, let me direct the first question to you. It says income tax return filing in India has become more a reconciliation work like the GST return, particularly with artificial intelligence. What is the possibility that a global tax law, like the one that we are debating, will be introduced? And what do you think will happen to an Indian chartered accountant? Is he ready for facing it?
I think with digitization and the way the world is moving, whether we are talking about an Indian tax return or a global tax return under a global charter, it is ultimately something which is going to be system driven, come out of the system and get filed perhaps on its own. That is the way the world is moving. That's the way systems are moving. That's the way artificial intelligence is moving. But that does not mean that we won't have a role. There is still a tremendous role which will be available in going behind what those systems are, in improving those systems, in making them robust and in making them work. And that is where we would really come in.
Thank you. I have a very interesting question which says that we now have one tax rate to start with. This is the global minimum tax. Do you think the 15% global minimum tax under the two-pillar solution is one important step in the direction of one world, one tax? Pascal?
I would add to the question that it's not only a rate, it's a base. I mean, I'm fascinated by the fact that, as always, everybody focuses on the rate, but what has been achieved with Pillar 2 and the global minimum tax is a move towards one common base. It's an effective rate of 15% with a common base, with adjustments based on the different accounting rules to ensure that you have something comparable. Now, is it a step towards one tax? I'm not so sure. I believe it's a move towards ensuring that you limit frictions. I understand Pillar 2 is extremely complex and there will be a transition phase of adaptation and implementation. So I'm not sure we're going to move to one tax there, but to one system where you can manage differences, you can reduce differences, and you can make it easier at the end of the day for both taxpayers and administration. I understand it will take time. I mean, the immediate effect is that the level of complexity is high because tax is complex. And when you try to coordinate a tax system among more than 100 and plus countries, it's quite tough. But yes, it's a move into that direction, and not only on the rate.
Thank you. Philip, perhaps you can take this. Can there be one global DTAA model adopted, recognizing differences in domestic law so that there is uniformity in its interpretation? And my follow-up question is, and I wonder why OECD, while having an OECD model, commentary to the model cannot come out with interpretative principles that can help countries on interpretation. Philip, first you, and then we will end the session with Pascal's comments.
Okay. There have been various discussions going back over 100 years to have a single multilateral tax treaty, and at least at the moment, that doesn't seem to be feasible. Every attempt has not been successful, and that's because tax systems differ too much between themselves, and treaties are negotiated on a bilateral basis because it is necessary to achieve a coordination between the different tax systems. It is true that by having models, both the OECD model and the UN model, we have a huge amount of uniformity in the principles that that underlie this. But whether that could move towards a single multilateral convention, I think that is very much unlikely. I think we're more likely to have a World Tax Court before we have a single multilateral tax treaty. It doesn't mean to say, though, that there could not be certain issues that could be carved away with a multilateral approach. In a sense, the whole approach, particularly of well, I suppose to studies of Pillar 2, though Pillar 2 is not being based upon a multilateral convention, is to take the topic of taxing business profits of larger enterprises and treating that as a common issue for common rules across the world. And you could take, for example, the issue of individual employees, where there is a high degree of uniformity around, say, Article 15 of the OECD model, and have that as the basis for a single multilateral convention. I doubt whether that is something upon which there's so much disagreement between countries that you wouldn't achieve a possible thematic multilateral convention. The difficulty with having principles for treaty interpretation in the OECD commentary is that the commentary is itself something of a debated issue in terms of its role in interpretation. The commentary does actually say, for example, quite explicitly, look at the later versions of the commentary, and yet there are some countries that do not follow that. So I think if you're going to have a common set of rules, you will have to have them in some other form. For example, a multilateral convention, or at the very least, something like a set of principles adopted by a body like the United Nations there, because I think that has the possibility of reflecting not a consensus, but a sufficient coalition of countries backing up the principles in the way that you have UN principles dealing with many, many other topics outside of the realm of taxation. I have to say one thing finally that of which I am extremely jealous. Our cat used to come and sit on my lap, and also sometimes appear in Zoom conferences. But as my wife usually feeds the cat's allegiance has very strongly transferred to the person who clearly has the sovereignty and the one control in the house. So I can't get my cat to come and join us here. My cat is with my wife at the moment, I think.
Pascal, any comments on interpretative statements? For those of you who are not aware, we have a very interesting question in a review petition in the Supreme Court about the binding nature of an OECD commentary. It's a very interesting question. It will come up hopefully in 2024. But Pascal, to wind up, your quick comments on interpretative principles.
I think it brings us back to what I tried to start with, which is consent to tax. I mean, we need to go back to basics. What sounds like a very technical issue of whether it's the latest commentary which is binding or the version of the commentary when the country concluded the treaty, right? That's the question. Sounds technical. Actually, what does that mean? It brings us back to what is consent to tax, meaning when the parliament agrees to ratify a treaty, what does bind the parliament? That is the question at stake. And I think we tax people probably work a bit more on making these technical questions more in line or more palatable to parliament and to governments on this is compatible with consent to tax. But that's the whole dynamic of the international negotiation. That's the whole issue of a global tax court. That's the issue also with binding arbitration. What is compatible, what is not compatible with consent to tax? I think countries have today too strict an approach of consent to tax, of the concept of sovereignty, and I think they penalize themselves, they penalize taxpayers because of that. We should find a more compatible approach which would allow us to have common rules without denying consent to tax, and the fact that at the end of the day it's the people through their representative who have to decide on tax laws.
Well, thank you much, as we would have loved to carry on more. Before I hand it over to the organizers, please join me in thanking our panelists, Pascal, Philip, and Gautam.